What's up YouTube, it's your boy Turkey Chan. Today another S&P 500 update video. Today was the CPI release for July and here is the summary from Google. So it looks like overall CPI came in line with expectations. There's some rise in airfare, but everything else was a small slight increase. So food and energy rose by 0.3%. Food index was unchanged, energy decreased, shelter went up a bit. So typical things that would go up here and there, but mainly was just airline fares spiking. So I asked ChatGPT, what is going on today? And here's the summary. So July inflation came cooler than feared. So again, lower inflation means it's time to cut rates. Tariffs aren't impacting inflation as much, so let's cut some rates. Rates go down, people can borrow money easier, companies hire more, economy booms. Hopefully that in itself doesn't lead into more inflation, but we shall see. So the second sentence, this has boosted hopes to the Fed cutting rates as early as September. So I think the percentage of them actually cutting rates has gone up to 92-94%. So very, very high chance next month, FOMC, I think it is September, middle of September. I forgot, early September. I don't remember, but all eyes on that September meeting. I think equities will remain flat, bounce around here and there. Until then, I feel like that's the next big catalyst. So I feel, again, this is all my opinion. From now until September, we're just going to chop around a bit more like this for a month. And then we'll either go down if they don't cut rates or go up if they do cut rates. Or heck, maybe even do nothing because that rate cut is already priced in to the current price of things. All right. So next point, sky high odds of a September rate cut. Yep. There it is. 94% of a quarter point cut in September. And then there's U.S.-China trade. So I did see some stuff on CNBC where Trump is going to delay the China tariffs escalations a bit more just so Scott Bessent and his team could hack out a deal. And the reason why it's taking a bit longer is Scott Bessent explained that there's a lot of things going into this deal, not just around trade, but also other aspects that the U.S. has been trying to get China to do for a while. So they're trying to lump all of that in to this deal. And then next, broad gains across the sectors. All 11 sectors of the S&P 500 went up. So that's pretty good. I think a week ago people were saying that the S&P 500 since a month or two ago, if you take out the top 10 companies, the rest, the 490, S&P 490, pretty much remained flat for the month. So again, that's waning on people, thinking that they would expect more breadth in the market, but because there's not, they're fearing overvaluations, yada, yada, yada. But most of the time, pullbacks come every 3 to 4 months. Corrections come once, twice a year. So we shall see. We are due for some, historically speaking, we are due for a 3 to 5% pullback based off the averages, but we shall see. Hey guys, here's the quick summary. Overall, very, very green day. If you were invested, you made it out handsomely today. Another 1% day. It's been a while since we had a solid 1% day. All-time highs. I think we're going to 650. I think some analysts have it predicted at 700 end of year. We shall see, but it's been a wild year. It's been a wild year. If you got in August 1st, when it did that little pullback, you get a nice little 3% return. Again, if you got in that April tariff day, this is again another opportunity. It's basically saying, hey, when tariff day happened, basically you get to go back in time to 2021 to invest. If you know the market's going to go up, you get to go back in time. So yeah, 2022, 2024, 5 different years, same old volatility. So people that dollar cost average, time in the market beats timing the market, they're doing well. They're doing well. So again, it's always Bears versus Bulls. Right now, the Bears are winning, but we shall see if the Bulls can fight back. Again, final prediction is we will chop around until the FOMC rate cut meeting. Once that's confirmed, expect another pop here or there. That's it, folks.